Alright everyone, and welcome back to the channel for another Bitcoin update. So, the bull trap has now completed. We've had that failed move, and just like I've been talking about in my videos, it is time for the fast move in the opposite direction. Let's go over to a slightly cleaner chart. Let's clear everything up and just take it right back to basics for 1 second. So, just like we were talking about before, you've got this massive bear flag leaning to the downside over on the BTC USD price. About a week or so ago, 2 weeks ago or so now, we had this failed move below the bottom of the bear flag, and because of this, as I always say on my channel, a failed move equals a fast move in the opposite direction. We managed to ping back above this. We didn't close any significant candles beneath this structure, and because of that, failed move equals a fast move in the opposite direction. You rocketed to the upside. What do we do over on this side? So we came up to the top of the bear flag, and as you can see, we did the same thing. We tried to break out, we had a failed move, and now this is solidifying as a fast move in the opposite direction. As of the time of recording this, we're already getting pinged beneath 22,000. Now, you might be wondering, why is this moving fairly quickly to the downside at this moment in time? Well, we head back over to this chart, clear everything up. Let's actually remove these so we can still see the support boxes that we were talking about before. So, getting rid of this. You can see what we're mainly focusing on is the 200-week moving average and this support box to the upside. Now, it doesn't really necessarily matter what's down here. What's important is that we move to the top of the structure. You can see this green horizontal line marking touch points here, marking touch points here. This was the zone to flip. This was where you needed to flip above it. You needed to come back down, back tested it. We back tested it. You started to head up. You didn't take out the invalidation zone. You made a lower high. Ever since then, you've been Ming out, and we broke to the downside. So we'll look at the M pattern breakdown target in a second, because we talked about that in the last video. But the most important thing to note is you move to the upside of this structure. You didn't manage to clear it. Clear everything up once again, and just keep the 200-week moving average on the chart. And you can see on the daily time frame, you moved back above the 200-week moving average. On the weekly time frame, you literally just solidified a 2-week double candle body close rejection from this. So really not looking good. As you can imagine, it's Monday today, so yesterday's candle body closes what we were looking to have a close above for this structure. Now, we needed to close above, higher than 22,700. We opened the candle body yesterday at 22,500. We pushed all the way up to 23,000, and then come over to the 4-hourly time frame, and you can see, this was literally like 4 hours before we needed to close above the market structure, and bears just said nope. We completely pushed all the way back down. We closed literally right underneath the 200-week moving average, so we had a failed close. We closed at 22,600, so just about $100 below the 200-week moving average over here. And you can see what happened with the 4-hourly candle body close. You just completely rocketed to the downside of this. So the market structure in the lower time frames is now a downward sloping channel. Now, I imagine there's going to be some bulls who crucify me if I don't mention this, so you can definitely look at this as a potential bull flag. However, there's a lot more important things going on with the market structure in the higher time frames than what is going on with this bull flag, in my opinion. I'm going to make a separate video about this, but we've got a lot of things going on this week, which are definitely going to drastically affect the market. But in the higher time frames, clearing our chart back up to the state that it was before, so I don't lose any of my charts, any of my information. I think that's good. Like I said, the close below the 200 week says it all. Now, if we head over to some of our other charts, 4-hourly time frame Heikonashis, you can see this quite well. But we were talking about this M pattern breakdown right here, where you've got the neckline right here, you've got a run up, invalidation point, back test, lower high, and then this was where the M pattern was solidifying. If you come back over to the Japanese candlesticks, you moved beneath this, you came back up, you were very over exuberant with this, so you can definitely mark the neckline of this, potentially something like this. And then you can see, you've got your M pattern, you came back up, back tested the neckline. Now we're heading down. Where is the price target of this M pattern breakdown? You can see it's right over here. It's going to look a little bit wrong because I did this over on the linear scale. Now I'm on the log. But moving this back over, so that is the correct price target on a linear scale. You can see price target of this M pattern breakdown should be down here at 20,900. What's important about 20,900? Zoom out, you can see this is our next major cluster on your volume profiles for the VPVR. You're also coming down just below the neckline of this trend in this massive bear flag. So definitely not looking good for Bitcoin right now. If we do zoom into the lower time frames, first of all, let's look at the DXY. Now, none of the markets are open right now. We're going to have to see what happens with the stock market, the Nasdaq, everything when it opens. If we check out what's going on the stock market, pre-market looks like it wants to open bullish for quite a few of these. Let's look. Tesla's opening bullish. Meta is opening bearish. Coinbase opening bearish. DXY is already open. DXY is kind of heading, yeah, it's heading down on the daily, but it is still in a massive parabola. We'll look at that in a second. Let's see what else is going on. Airbnb opening bearish. Apple opening bearish. Netflix bearish. Microsoft bearish. So really only the SPY pre-market is still opening bullish, so we'll definitely have to see what this plays out later on today. Nonetheless, if we do come over to the Nasdaq, we talked about this in our last video, but the Nasdaq basically ran into its first area of resistance and got a brutal rejection from this. So even if the Nasdaq just comes back down and back tests this support before it starts heading up, I definitely think, you know, we've got things like the FOMC meeting, GDP meeting, literally within 2 to 3 days now. So it's really not the time for, you know, the stock market to be heading back down and retesting some levels, because when this bearish news comes out, we're going to have a storm of bearish news. Once again, I'll make a separate video about this, but this is just easily going to drag Bitcoin all the way back down to our next volume cluster down at 20,800, which once again, 20,900 is the M pattern breakdown, so a lot of confluence down at these levels down here. Bottom of the bear flag, M pattern breakdown target. Even if you do something like this, you would be continuing with the trend of just kind of zigzagging in this until we decide to make a final move. So a lot of reasons why we should be heading down to these lower price targets. Now, let's look at the DXY. We've looked at the DXY on this chart many times, so I won't comment on this right now. The DXY is heading down on the daily time frame, but once again, you know, when in doubt, zoom out. What is the DXY doing right now? It's in a massive parabola, and there's been many times where you have, you know, 2-week corrections, 2 weeks, 2 weeks, 4 weeks, 1 week, 2 weeks. We're only in that first week corrections on the Heikonashi's Japanese candlesticks. We're coming in for our second brutal correction, but nonetheless, we're still in a massive parabola. So I wouldn't count the DXY or the dollar out at this moment in time, especially after we have our FOMC meeting. If they do raise the interest rates, it's only going to provide more fuel for the DXY to continue heading to the upside. This was the 2020 capitulation, because I believe when we clear this up, yeah, we were previously talking about this before. We basically got a massive cup and handle playing out over here, where this handle was forming over the course of a month or so. You've got this massive cup, and I believe drawing your fib target from your low to your high should be up here at like 111, 113. I'm on a log scale, so let me retry this. I think it was 111. Oh no, so it is around about 113, so I mean the DXY could definitely take another huge run to the upside. You'll probably know why we're heading down in the local time frame if you do watch my videos anyway. We talked about this cup and handle pattern, which is right here. You've got the cup, you've got the handle coming down right here. And if we extrapolate the price target of this, you can basically see, you know, the DXY is having a correction right now because it's already come up and hit the majority of all of its price targets. So let's see, where do we break out? Over on the handle, we broke out right here. Extrapolating this up, you can see we hit our price target at just below 108, managed to push up to 109, and now we're heading back down for a little retest. But nonetheless, you know, the uptrend daily time frame still very much seems intact. You know, you've had many corrections over on the DXY, but we do keep on moving to the upside, and I don't think that we're going to stop at this moment in time. So let's bring it back a second. So we've got the parabolic rally. DXY is still looking very healthy. I talked about this in my last video where we were looking at the Bitcoin Elliott wave theory, and we were specifically looking at the daily time frame and 4-hourly time frame towards the latter half of this video, because I told you, you know, on both the total cryptocurrency market cap and also Bitcoin, it looks like, you know, this recent impulse that we've had from the low at 17,500 up to this high of, you know, as high as 24,500. I basically said, hey, this impulse to the upside has all the characteristics of a 5-wave in your Elliott wave structure. So if we clear this up, basically you've got your 1, 2, 3, this was your 4, and then we should be coming down for your 5. So I believe we were targeting around about 14k. Your 1.236 is actually going to be at 16k. So round about this region is where I really start to plan on aping into Bitcoin. But this is where I think Bitcoin's heading down to in the, not the immediate short term, in the next couple of weeks, in the next month or so. About another 28% correction, just like we talked about before. So in the immediate short term, once again, the next major volume cluster to the downside, the M pattern breakdown target, the bottom of this bear flag, and once again, considering how we've had a failed move above this, it makes sense we're going to have a fast move down to the bottom of this structure. So there are many areas of confluence sitting right about 20,800 down to as low as 25, well, let's just say we're going to take a couple of days to get down here, so about 20,500. So this is really where I think we're heading down to in the immediate short term. Let's draw to the bottom of the channel, about another 6 or 7% drop in the next couple of days, in the next, really the next couple of days before the FOMC. This is where I think we're heading to in the immediate short term. Bitcoin's already down 2.5% today. If we head over to the total cryptocurrency market cap, you can also see this is what I was talking about for the total crypto. It looks like you've just had your 4 wave, you've had your ABC back up to the upside, and now I'm expecting a major run back down. And once again, you know, we've got a long way to go down before we can even expect a correctory wave back up. So from where we are right now, I think moving down to the 618 on the Fibonacci's for the total crypto is more than fair. That's about 11% drop. So you can see Bitcoin definitely outperform altcoins during this drop to the downside. Now, wrapping up the video, looking at the Heikin-Ashi candles on the daily time frame, and then we'll switch over to the 4-hourly. Just like we were saying in our previous videos, you know, it looks like we've already topped out. We've already had our ABC back to the upside, fulfilling wave 4, and daily Heikin-Ashi's, you know, the Japanese candlestick started to head back down on the 20th of July, so about 5 days worth of a correction, but the Heikin-Ashis have only started gearing up for that move back down for the past 3 days or so. Over on the 4-hourly time frame, you can also see you're in a beautiful zigzag back down to the downside. Very clear-cut downtrend coming in on not only the 4-hourly time frame, the daily time frame, but once again, when in doubt, zoom out. What is going on the higher time frames? Has anything changed? Absolutely nothing's changed. You are still green on the weekly Heikin-Ashi, so a move below 21,800, 21,700, let's say 21,700 to be conservative, is where you are going to wipe out this green start to the weekly candle. Bear in mind, because Heikin-Ashi candles open approximately halfway through the previous candle, it distorts the current price a tiny bit. So right now over on the Heikin-Ashis, it's saying we're at 22,250, whereas if we switch back over to the Japanese candlesticks, you can see we're actually just below 22,000. So once again, this is really going to matter when we have our next weekly candle body close. If we close below 21,700, we're going to start another downtrend on the weekly Heikin-Ashis. And typically when you have these green impulses to the upside and then you start off another week with these red candles, it's always a sign that you're going to have another capitulation before starting another green trend, even if it is in the short term. So with that being said, total crypto market cap is heading down on the Heikin-Ashis. It's heading down over on Bitcoin. The new downtrend looks like it's finally coming into play. And if we do finish this off with the EMA ribbons, what happened with the EMAs? So we came up into these and we basically got rejected from the absolute top. So we definitely got more over exuberant than when we were at 32,500. We showed a little bit more strength in the market by having a very huge fake out. I mean, if you draw the lines on this, you can see, you know, this was in a textbook downtrend. However, you know, no matter how you really draw these, even if you draw like a horizontal ray from the top, you can see, you know, this was a clear fake out, and it was a fake out because you really didn't have, you know, candle body closes above this structure. You didn't have volume supporting it, but you did have volume confirming it getting whacked all the way back down. So definitely not a good time to be a Bitcoin bull, in my opinion, unless you're buying now for the next couple of years. Then, you know, same here. That's what I'm doing. I think this is a great buy for the long term. Do I think this is the bottom? Absolutely not. This is my mood the entire way down. If you are a bull right now, then I'm basically beckoning you into my bag, because this once again is another bull trap that has now solidified. I think we're heading back down to the downside. Keep your eyes on the daily EMA ribbons at 21,850. We're literally like $150 away from this, but a solid move below the bottom of these EMA ribbons is basically going to magnetize you to the price targets we were talking about in the first half and the middle part of this video. Once again, round about that 20,800, potentially as low as 20,500. So that's all I've got for you now. Fear and Greed Index is a little bit, it's definitely bounced from the lows, sitting right about 30 right now. We are also below, once again, the 200 week. This is historically a great place to buy for the long term, and I, once again, am in agreement with this, but nonetheless, at this moment in time, I do not think that the bottom is in. Coming over to the realized price, wrapping everything up really quickly, just want to make a few comments on these. The realized price is basically the average cost basis of every Bitcoin, so it just takes into consideration every single Bitcoin that was recently put. It takes into consideration every Bitcoin that was purchased, and it takes that price that it was purchased at and divides it by the number of Bitcoins in circulation. So instead of this being the current price, this is basically the average price of Bitcoin, what people on average have paid for it. And once again, this is another indicator like the 200 week heat map, where you can see when you do move below this line, the bottom is normally in, but we're definitely in a crazy market scenario right now. The realized price is currently sitting at 21,870, which is also beautifully lining up with the daily EMA ribbon. So a move below 21,800 is not only going to confirm every type of rejection, you're not only going to be moving below basically everything you need to be above. 200 week moving average, the invalidation point from the breakout of this bear flag. You're also going to be skewing this potential quote unquote bull flag here, because, you know, if we remove the EMA ribbons, you can see if you start to, you know, really quickly head down, like on the daily or even tomorrow, if you head beneath this 21,800, you're basically going to be hugging death at the bottom of this bull flag. So any further below there, then you can definitely rocket to the downside of the EMA ribbons. You're going to fulfill the price target of this M pattern breakdown, and the further back down you go, the more likely it is that we're just going to get absolutely brutalized and get magnetized to the bottom of this trend, because once again, my friends, this was a failed move. And what does a failed move almost always equals? Just like it did down here, failed move equals a fast move in the opposite direction. We are getting ready to head back down, in my opinion. So keep your eyes on 21,800. That's where the realized price is. That's where the daily EMA ribbons are. If you close the daily beneath there, say goodbye to the bullish trend. As always, my friends, that is all I've got for this episode. I will be making a couple of other quick updates towards the end of today. I've definitely got at least another one Bitcoin video coming, and then I'll be talking about what is going on in the markets, which is very important. We've got a lot of things outside of the FOMC and the GDP going on this week. So as always, all I've got for you today, my friends. Cowboy out. Peace.